everyone, I am Juliana Lopez together with my groupmates Artiaga, Jonamae Banilad, Angel Borja, Ana Santiago, and Leinette Torot will discuss the Chapter 8, which is Financial Reporting and Management Reporting System. Here are the learning objectives. At the end of this video, you will be able to first understand the operational features of the General Ledger System or GLS. Next is Financial Reporting System or FRS and the Management Reporting System or MRS. Second, be able to identify the principal operational controls governing the GLS and FRS. Third, understand the factors that influence the design of the MRS. Fourth, understand the elements of a responsibility accounting system. And last, be familiar with the financial reporting issues surrounding XBRL. The General Ledger System is a critical tool that supports the recording and management of an organization's financial transactions. It offers a consolidated view of the financial data, allowing organizations to monitor their financial health, make informed decisions, and comply with regulatory requirements. And the primary purpose of the General Ledger System is to maintain a detailed record of all financial transactions, organized into accounts based on the charts of accounts. The GL system performs several key functions. One is recording transactions. It is the GL system records various transactions including revenue, expenses, assets, liabilities, and equity changes. Two is classification. It is the transactions are classified into appropriate accounts based on the chart of accounts, facilitating accurate financial reporting. Three is summarization. It is the GL system summarizes transactions periodically, generating trial balances, balance sheets, income statements, and cash flow statements. And last, auditing and control. It is the GL system supports internal and external audits by providing a clear trail of financial transactions and changes. Implementing a GL system offers numerous advantages to organizations: accuracy and reliability, financial reporting, data analysis, and audit preparedness. Accuracy and reliability, the GL system promotes accurate recording, classification, and summarization of financial transactions, reducing errors and enhancing data integrity. Next is financial reporting. The GL system provides the foundation for generating essential financial statements required for decision making, investor relations, and compliance. Third is data analysis. Organizations can analyze financial data to identify trends, patterns, and areas for improvement. Fourth is audit preparedness. A well-maintained GL system simplifies auditing processes and helps organizations meet regulatory requirements. Figure 8-1 characterizes the General Ledger System or GLS as a hub connected to the other system of the firm through spokes of information flows. Transaction cycles processes individual events that are recorded in special journals and subsidiary accounts. Summaries of these transactions flow into the GLS and become sources of input for the Management Reporting System or MRS and Financial Reporting System or FRS. The bulk of the flows into the GLS comes from the transaction processing subsystems. Note, however, that information also flows from the FRS as feedback into the GLS. We shall explore this point more truly later. In this section, we review key elements of the GLS. And for journal vouchers, it serves as essential tools in accounting process, enabling organizations to document financial transactions accurately and comprehensively. Then, they play a crucial role in maintaining the integrity of financial records and ensuring compliance with accounting standards and regulatory requirements. The primary purpose of the journal voucher is to provide a formal and structured means of recording financial transactions. It serves as evidence of the transaction, outlining the essential details required for accurate and transparent record keeping. Journal vouchers are used for various purposes, including: first is the correcting errors or discrepancies of previous entries. Next is adjusting accounts due to changes in estimates or circumstances. Third is recording non-standard or infrequent transactions. Fourth is documenting complex transactions that involve multiple accounts. A typical journal vouchers comprises several key components. First one is the date. It is the date on which the transaction is recorded. Next is narration. It is a brief description of the transaction nature and purpose. Third is the account codes. It is the account numbers from the chart of accounts affected by the transactions. Fourth is the debit and credit amounts. It is the monetary values to be debited and credited to the respective accounts. And lastly, supporting documents. It's attached or references to invoices, receipts, contracts, or other documents supporting the transactions. The source of input to the general ledger is the journal voucher, which is illustrated in figure 8-2. A journal voucher which can be used to represent summaries of similar transaction or a single unique transaction, identifies the financial amount in affected general ledger accounts. Routine transactions, adjusting entries, and closing entries are all entered in GL via journal vouchers. Because a responsible manager must approve journal vouchers, they offer a degree of control against unauthorized GL entries. Data topic is the general ledger system database forms the core infrastructure of an organization's financial data management. It consolidates and organizes financial transaction information, supporting accurate financial reporting, decision-making, and compliance with regulatory standards. The significance of the General Ledger System database lies in its role as the repository of all financial transactions. Key reasons for its importance include data integrity, financial reporting, and audit trail. First one is the data integrity. The database ensures the accuracy and consistency of financial information through structured storage and validation mechanisms. Next one is financial reporting. Reliable data from the database contributes to generating accurate financial statements, supporting strategic decision-making. And last one is the audit trail. A well-maintained database provides an audit trail for tracking changes and ensuring transparency in financial records. The structure of the General Ledger System database encompasses several essential elements. One is tables. Separate tables store data related to accounts, transactions, charts of accounts, and more. Two is fields. Each table contains fields that define the attributes of the data to be stored. For example, account number, transaction date, and the debit and credit. Third one is relationships. Relationships between tables establish connections, allowing the data to be linked and retrieved cohesively. Employing a well-designed general ledger system database provides numerous advantages. Accurate financial reporting, data accessibility, efficient querying, consistency and standardization, and historical tracking. The accurate financial reporting, the database ensures that financial statements reflect accurate and up-to-date information. While the data accessibility naman, authorized users can easily retrieve relevant financial data for analysis and decision-making. Ang efficient querying naman is the database enable efficient searches and queries facilitating quick retrieval of specific financial information. Consistency and standardization. Data consistency is maintained through standardized formats and validation rules. And the last one is the historical tracking. The database supports tracking changes over time, aiding in performance analysis and decision making. The GLS database includes a variety of files, whereas this will vary from firm to firm. The following examples are representatives. The General Ledger Master File is the principal file in the GLS database. This file is based on the organization's published chart of accounts. Each record in the GL Master is either a separate GL account, for example, sales, or the control account such as AR control. For a corresponding subsidiary ledger in the transaction processing system, figure 8-3 illustrates the structure of a typical GL master file. The FRS draws upon the GL master to produce a firm's financial statements. The MRS also uses this file to support internal information reporting. The General Ledger History file has the same format as the GL master. Its primary purpose is to provide historical financial data for comparative financial reports. The journal voucher file is the total collection of the journal vouchers processed in the current period. This file provides a record of all general ledger transactions and replaces the traditional general journal. The journal voucher history file contains journal vouchers for past periods. This historical information supports management's stewardship responsibility to account for resource utilizations. Both the current and the historical journal voucher files are important links in the firm's audit trail. The Responsibility Center file contains the revenues, expenditures, and other resource utilization data for each responsibility center in the organizations. The MRS draws upon this data for input in the preparation of responsibility reports for management. Finally, the Budget Master file contains budgeted amounts for revenues, expenditures, and other resources for responsibility centers. This data, in conjunction with the Responsibility Center file, are the basis for responsibility accounting, which is discussed later in the chapter. As we have seen in previous chapters, certain aspects of GLS update procedures are performed as either a separate operation or integrated within transactions processing systems. Our focus in the next section is on the interrelationship between the GLS and financial reporting. This involves additional updates in the form of reversing, adjusting, and closing entries. Let's now turn our attention to the financial reporting system. General ledger system procedures are the backbone of an organization's financial data management. These procedures guides the systematic recording, classification, summarization, and reporting of financial transactions, contributing to financial transparency and compliance. Accurate financial records are fundamental to an organization's success. General ledger system procedures ensure data integrity, facilitate financial analysis, and aid in regulatory compliance. Key reasons for their importance include accurate reporting. Procedures ensures transactions are accurately recorded, leading to reliable financial statements. Next is transparency. Well-defined procedures enhance transparency, fostering trust among stakeholders. Third one is decision making. Accurate data enables informed strategic decisions and effective resource allocation. General ledger system procedures encompass various steps in the financial data management system. First one is recording transactions. Transactions are entered into the system through journal entries, capturing date, account codes, amount, and descriptions. Next one is the classifications. Transactions are categorized into appropriate accounts within the chart of accounts. Third one is summarization. Transactions are summarized periodically to generate trial balances, financial statements, and management reports. Next one is the adjustments. Procedures include adjusting entries to accounts for accruals, deferrals, and corrections. Last one is the closing entries. Year-end procedures involve closing temporary accounts and transferring balances to permanent accounts. The law dictates management's responsibility for providing stewardship information to external parties. This reporting obligation is met via the FRS. Much of the information provided takes the form of standard financial statements, tax returns, and documents required by regulatory agencies such as the Securities and Exchange Commission or SEC. The primary recipients of financial statement information are external users such as stockholders, creditors, and government agencies. Generally speaking, outside users of information are interested in the performance of the organizations as a whole. Therefore, they require information that allows them to observe trends in performance over time and to make comparisons between different organizations. Given the nature of these needs, financial reporting information must be prepared and presented by all organizations in a manner that is generally accepted and understood by external users. The financial reporting system plays a critical role in conveying an organization's financial health, aiding aiding stakeholders in understanding its financial performance and making informed decisions. This system ensures that financial information is presented in a standardized and understandable format. The primary purpose of the financial reporting system is to provide relevant, accurate, and timely financial information to various stakeholders including management, investors, creditors, regulators, and the general public. This system supports several crucial functions. First one is informed decision making. Stakeholders use financial reports to assess an organization's financial performance, risk, and potential for growth. Next is investor confidence. Transparent financial reporting fosters trust and confidence among investors. Next is regulatory compliance. Organizations must adhere to accounting standards and regulations when preparing financial reports. Next one is resource allocation. Management uses financial reports to allocate resources effectively and make strategic decisions. The financial reporting system comprises several essential components. First one is the financial statements. This includes the balance sheet, income statement, cash flow statement, and the statement of changes in equity. Next is the notes of financial statements. Supplementary information providing context and explanations for items presented in the financial statements. Next is the management discussion and analysis, a narrative section that accompanies financial statements, providing management's insights into the organization's financial performance and prospects. Sophisticated users with homogeneous information needs. Because the community of external users is vast and their individual information needs may vary, financial statements are targeted at a general audience. They are prepared on the propositions that the audience comprises sophisticated users with relatively homogeneous information needs. In other words, it is assumed that users of financial reports understand the conventions and accounting principles that are applied and that the statements have information content that is useful. Financial reporting is the final step in the overall accounting process that begins in the transaction cycles. Figure 8-4 presented the FRS in relation to the other information subsystem. The system illustrated and numbered in the figure are discussed briefly in the following section. The process begins with a clean slate and the start of a new fiscal year. Only the balance sheet or permanent accounts are carried forward from the previous year. From this point, the following steps occur. First is the capture the transaction. Within each transaction cycle, transactions are recorded in the appropriate transaction file. Second, record in special journal. Each transaction is entered into a journal. Recall that frequently occurring classes of transactions, such as sales, are captured in the special journals. Those that occur infrequently are recorded in the general journal or directly on the journal voucher. Third is the post to subsidiary ledger. The details of each transaction are posted to the affected subsidiary accounts. Fourth is the post to general ledger. Periodically, journal vouchers summarizing the entries made to the special journals and subsidiary ledgers are prepared and posted to the GL accounts. The frequency of updates to the GL will be determined by the degree of systems integration. Fifth, prepare the unadjusted trial balance. At the end of the accounting period, the ending balance of each account in the GL is placed in a worksheet and evaluated in the total for debit-credit equality. 6. Make adjusting entries. Adjusting entries are made to the worksheet to correct errors and to reflect unrecorded transactions during the period, such as depreciation. 7 is the journalize and post adjusting entries. Journal voucher for the adjusting entries are prepared and posted to the appropriate accounts in the GL. 8. Prepare the adjusted trial balance. From the adjusted balances, a trial balance is prepared that contains all the entries that should be reflected in the financial statements. 9. Prepare the financial statements. The balance sheet, income statement, and statement of cash flows are prepared using the adjusted trial balance. 10. Journalize and post the closing entries. Journal vouchers are prepared for entries that close out the income statement accounts and transfer the income or loss to retained earnings. Finally, these entries are posted to the GL. Uh, Last, prepare the post-closing trial balance. A trial balance worksheet containing only the balance sheet accounts may now be prepared to indicate the balances being carried forward to the next accounting period. And now, let us hear Miss Anna Nicole Santiago for the next part of the Chapter 8.